It's been a wild week on Wall Street following Jerome Powell's hawkish tone on inflation and, of course, today's jobs report. Joining us to help make sense of what it means for markets and what investors should do next, Ameriprise Financial Private Wealth Advisor and CEO of O Plus, Advice First, Nancy Daoud. So, Nancy, let me ask you, first blush impression of this morning's payroll report, some good, some bad potentially, and what does it mean for markets?
Well, it was probably a little bit better than what's expected, but not much. So I don't know that there will be that much of an impact. Everything is pretty much as expected. These are usually lagging indicators, so we're not going to see the job market numbers really change dramatically until several months later. So although we're hearing about layoffs and changes, that doesn't really get posted in the data until significantly later. But apparently women are going back into the job markets in droves, so that's creating a little bit of more activity than normal.
Well, let's talk about that. If we got a second, can you delve into some of those statistics that you just mentioned, when women re-entering the workforce in droves? What's supporting that?
Well, they had pulled back. There was a significant pullback in both men and women during COVID. And although the male population went back to work fairly quickly, the female population lagged a little bit, and now that's catching up. So that's probably affecting some of those numbers, but who knows?
Yeah, who knows? We deal with aggregates here, and sometimes it's difficult to read into them. We saw a rise in temporary workers this morning, and I'm just wondering if that means anything to you with respect to minimum wage standards. Sometimes, and this is just one theory I've seen floated, that companies realizing that there is or potentially a big economic downturn or even a small one, they're trimming their books. They're getting rid of full-timers and maybe loading up on some of those temp workers. Just wondering if there's anything or any kind of narrative you're seeing there that's emerging from the data.
Well, it's all, a little bit from each aspect. The inflation is going to eat away at every aspect of business. So, when California raises the minimum wage to $15 per hour, how many more states are going to follow suit, and what effect will that have? These are all just one more line item that is sort of the product of the inflation that we're experiencing. And it's just all falling into place. We're seeing it finally happening.
Yes, and we saw the wealth gap actually expand quite a bit over the last 15 years. Most of that time we had very low prevailing interest rates, but now we're seeing interest rates rise along with inflation. And I'm just wondering how this fits into what you're seeing happen with fiscal policy, trying to close that wealth gap. Any silver lining there with respect to maybe higher interest rates once we get over this inflation hump are going to actually help close the wealth gap?
Well, I'm not sure that we're going to be able to close the wealth gap anytime soon. That, like I said, it depends on how many other states follow suit and how corporations respond to the inflationary pressures. But we are seeing corporate profits decline. We are seeing debt costs rising. So that's certainly going to affect markets. And these are all things that are expected in order to get to the other side of the inflation number, which Mr. Powell has been very adamant about. He's been quite consistent about, well, we're going to just keep raising rates until we get there. So we are somewhat beginning to see that happen now. The reality is finally occurring, and it's painful. And it's going to be painful for a few more months. Probably not until the later part of this year or into early 2024.
And so what would you...
So for investors...
Yes, that was my next question. What should investors do?
Well, so what we're telling our clients is we've got to stay the course. We keep taking a survey of each person's appetite for risk again. We're testing their stomach lining, as I call it. Are you okay with where you are? Because this is going to last a little bit longer. How do you feel? And I think that's a really good measure to keep asking yourself, am I okay with what's going on? Because bear markets, just like bull markets, do end eventually, and this too will pass. But we just have to be a lot more patient.
Yep, this too will pass, and we thank you for your insights here. Nancy Daoud, American Financial Private Wealth Advisor and CEO of O+.